A top concern for deal makers in recent years is the price mismatch between buyers and sellers. Here to chat more about the valuation gap and how to overcome it is Jen Cuello, audit partner with EisnerAmper and incoming ACG board member. Tell me about why that valuation mismatch exists and the impact of it that you're seeing in the funds that you audit.
Sure. So I think broadly it comes down to two main things, and that's timing and uncertainty. So a lot of private equity sellers that are bringing assets to the market right now purchased those assets in 2020 and 2021, which were really peak valuation times. So they have a higher hurdle to kind of get over when they're selling those assets in the market today to make the returns that they're looking for. So that's first and foremost. Now, buyers are aware of that. So they are kind of wary of overvaluation practices that might exist because of those factors that the sellers are working with. Couple that with a complicated deal environment, I would call it, less IPOs in the past couple of years, less strategic buyers in the market, less opportunity to sell those assets in general. And you really have this very difficult dynamic. It's also creating, for private equity funds that we work with and others work with, it's creating a lot of pressure for LP liquidity. So to solve for that, some of the strategies that have been employed are continuation funds and secondary transactions. With those types of transactions, though, it kind of creates this valuation kind of distortion in the market, I would call it. And that's because some of those transactions are done at discounts. So it might solve one problem, but create another. So that's kind of the timing concern. From an uncertainty perspective, that's kind of been the name of the game. Double underlying uncertainty is what we've been dealing with. Geopolitical uncertainty, monetary policy uncertainty, how AI is going to impact every company that kind of comes to market. And some of the conversations that buyers and sellers are having is what kind of impact will that have on every single company, these shocks that have hit the deal market, this kind of potential for AI, but also is it a one-time impact or is it kind of lasting with the companies that are coming to market? So I think that's what's creating the valuation mismatch. But I do think there's a lot of good news here, right? So I think, we're here at ACG DealMax 2026 and the deal environment is strong. People are wanting to get out there and make these deals happen. And there's also certain structures out there that are available, that you can put into these deals to kind of bridge that gap a little bit. So earn-out considerations, deferred consideration, and those kinds of things that you can put in to kind of quell everybody's fears and get these deals over the finish line.
Mm-hmm. All right, so there is a lot going on, a lot of uncertainty, as you said, still that valuation gap, still opportunities, though, for deal making, creative deal making, as you say. All things considered, how has the audit process had to evolve to accommodate for all of this?
So I think the audit process has become much more robust. So obviously, when we're auditing a given private equity fund, we're auditing every piece of that. But our primary kind of risk area is valuation because it is very subjective. So what we'll come in and do is, we'll come in at the year end, but we're also talking to our clients throughout the year about certain considerations of their portfolio. And within that portfolio, you can have a bunch of different companies with different industry factors, or you can have kind of all the same thing. But a couple things kind of reign true, and that is we have a situation where we have to really stress test and put ourselves in the shoes of the market participants that could potentially purchase these investments. And that can be, again, different across the portfolio. And those questions, I like to think that we ask them the tough questions before they need to answer them to potential buyers in the market. And we have to bring industry expertise to the table as well. And I think audit-wise, both with our firm and a lot of other firms that we know and work with, auditors can be generalists. So you really need to have an army of people behind you that really understands a particular industry and how that industry might be affected by any kind of market dynamics that are going on. So we're very lucky that we have that group that helps us out.
Absolutely. And my final question for you, Jen, how are you ensuring the accuracy of valuations? What are some strategies that you're employing?
Yeah, so first is definitely putting ourselves in that market participant's shoes. And that market participant is an interesting concept because it's really supposed to be somebody that is a third party that's doing a transaction at arm's length under an orderly situation. And I would argue we haven't had an orderly situation in a while. But we do our best to kind of put that in there. And what we're asking our clients to think about is we're asking them about comparable transactions in the market. What does a truly comparable company look like in the market? And can you find one? Or are there some nuances or differentiators in your company? what are you really using to value this? Are you using public comps? Are you using a discounted cash flow because you think there's more kind of earnings in the future? And then is it reasonable that you're using that? Like, is the next 12 months number really a number that somebody can hang their hat on that has something real and substantive behind it? And I think that's also getting into questions about things like EBITDA adjustments. I think that is such a highly negotiated thing right now because it used to be that everybody would pay on those adjustments. And now I think there's a lot more scrutiny and a lot more diligence around it. I really do like to think, though, that we're helping our clients really understand, again, what that market participant looks like, what the potential paths to exit are, and what's really reasonable in these current market dynamics.
All right. Well, that's a lot to consider with valuations in such a complex market. So, Jen, thank you so much for joining us.
Thank you so much for having me. It was great.